Good day, everyone. My name is Atenkosim Chebeza, and today we'll be initiating on Deutsche Telekom. We think Deutsche Telekom offers value on the sum of the parts basis, and it's coupled with improving organic growth prospects. So the company is actually quite cash generative, high free cash flow generation coming from the company, and we think the organic growth profile is quite improving. Really, what's improving the organic growth profile is a US subsidiary, T-Mobile, and there's quite a recent corporate actions that have been announced. So there's a share buyback. They just announced a tower sale, which will receive about 5 billion. Share buyback is a roughly 60 billion, and it owns 48% of the business. So we think those definitely provide levers to pay down the debt and also unlock some of the value within the business. So we value it in the sum of the parts. We have about 32% upside. And then the company has several listed entities around Europe, and the biggest one is in USA. That's T-Mobile. And if you value the company using the relative market caps, you have further upside, slightly higher at 25 euros per share. Just looking at all of that and probably highlighting the risk and what would make us change our mind. If the organic growth profile starts to change and we're not seeing growth coming from the US, or starts deteriorating in Europe, could be new entrants. That would be a key red flag. And also if the integrations, so T-Mobile had acquired Sprint, as we highlighted out in the report, if that synergies or integration don't go according to plan, that would be a key red flag as well. So generally with telcos, if CapEx starts to roll out higher than expected, it's usually a red flag that the returns on investment might be low, so that we also keep an eye out for that as well. When we value the company, as mentioned, we value it on the sum of the parts. So if you just look at the waterfall diagram, so the German part of the business, it's about 10 euros per share. And then the US subsidiary, where most of the growth is coming from, and it's growing around about 4 to 6%. That's excluding the synergies. It's roughly about half of the business. As mentioned, they own about 48%. So if you take out the minority interest, that puts the US business around about half of that. And then we've got the rest of Europe. So the half of this business is coming from the US, which is growing around about 4 to 6% in their earnings. And they've got massive debt on their balance sheet. But we think there are definitely levers that will help unlock this, pay down this debt, which is one of the tower sales, which is about 4 euros per share. And also that you've got strong free cash flow generation coming through and a recent share buyback that's been announced. So our intrinsic value comes to about 24 euros per share, and it offers an upside of around roughly 32%. Just unpacking the free cash flow, which is key to our investment thesis, is that the company T-Mobile has sort of guided that they are at the recent capital markets day that they'll be growing their earnings from roughly about 23 to 36 billion per annum, moving to 2026. We think that definitely offers a lever, and really driving that is the synergies between them acquiring the Sprint business. So as things starts to normalize, when they shut down the extra redundancies, mainly the Sprint network, you'll see even their capex requirements come down significantly from the 12 billion to a roughly 10 billion. And that gives you a nice kicker on the free cash flow. So currently the European business has a free cash flow of about 4 billion. And if you include the current run rate of the US business, that's T-Mobile, that's another additional 5.5. They shut down the Sprint networks, which means a higher free cash flow, adds about a 3 billion, and really the earnings growth. So the run rate moves from about 9.5 billion to 16 billion as things starts to normalize. So that definitely puts the company's free cash flow yield at roughly 10 to 12%. Going forward when things starts to normalize. So we think that's definitely a key element in our investment thesis. And as sort of mentioned, the company has got quite high gearing presently. So it's roughly about 130 billion euros. And it's a net debt to EBITDA of about 3.1 times. So they had the tower sales. The deal was concluded. It's roughly about 17.5 billion. They only sold 50%, and after taxes, they'll receive about 5 billion. So that pays down the net debt to about 2.9 billion. And then you have the share buyback, which they entitled to 48%. That's how much they own of T-Mobile. It pays the debt further down to around about 2.55 times. And we think that puts them within their range of 2.7 times. So So we think the debt gearing, although it's quite elevated where it is, there's definitely quite a lot of levers that will help them to pay it down. That's even excluding the free cash flow that they have coming their way. So as mentioned, we value the company on the sum of the parts basis. When we value the company, so there's Germany, there's the rest of Europe, and there's the US business. So we look at the EV to EBITDA basis of all three. We're very conservative on the US arm of the business, and we're very conservative on the German part of the business, and we're sort of in line with the rest of the Europe. So this brings us to an EV to EBITDA of about 6.8 times. Generally with telcos, they trade within the predefined range, not too volatile. And that's why we have a probability of around 50% on that basis. And that's how we get close to about 24 euros per share. And then in the bull case, we think if we see the Sprint merger coming through, and also as the earnings starts to grow of the US business, which trades at a higher multiple, it will warrant a higher rating within the bull case. And that's why we pick a slightly higher probability on that basis. And our bear cases are around 10%. So the company is very defensive in nature, and we get a weighted probability of about 24 euros per share, which, as mentioned, represent about a 31% upside. Really, that's the crux of our investment thesis. We think Deutsche Telekom does offer value when you value it on the sum of the parts basis, looking at the key regions. We think the growth prospects are improving as the T-Mobile starts to integrate Sprint within their business, and really T-Mobile being the driver of the growth. The European incumbents are growing around about 2 to 3%. T-Mobile pushes that further as it grows about 4 to 6%. That's excluding synergies. And the recent corporate action definitely provide levers for paying down debt and investing in network as you go further. So what would make us change our mind? We see competition starting to come through and being disruptive. That would affect the organic growth profile. The Sprint acquisition, if that doesn't go through or higher than expected capex, that will be definitely the red flags. Our intrinsic value is about 24 euros per share, which represent about 32% upside, and our recommendation is on a buy. If you wish to place a trade, you can speak to any of our advisors or trading desk. And that concludes our presentations for Deutsche Telekom today.